Sampath Reddy of Bajaj Allianz Life Insurance to talk a bit more about the fundamentals of the market. Sampath, hi. Good afternoon and welcome to the show. Just want to get in get started with your perspective on the markets right ahead of elections. We've seen a fairly range-bound session all of this week so far, and the mood overall is also looking a bit tepid. Is it likely to remain this way, or can we expect some volatility, some divergent moves going forward as we step into the election period?
I mean, it's very difficult to predict how the markets will move in the very short term. Given that we have seen a very good rally in the last 1 month. Markets were up about 8-9% in the just last 1 month itself. To that extent, markets at the moment looks pretty much priced in for a good outcome even for the forthcoming general elections. From now onwards, I think one has to wait how the election will pan out, and more importantly how the quarterly earnings season will pan out. That's very important to watch for. We've been generally factoring in a good earnings recovery in the beginning of the year for the last 3 to 4 years, but as we move into the years, the earnings estimates were being really cut. So far, that's how been the trend so far. We have to really watch for how the earnings will pan out. I think that will be the near-term driver. And for a longer-term perspective, I think given that India continues to be one of the better growth markets vis-a-vis most other emerging markets, I think we'll continue to do well. Given that big rally in the last 1 month, I think markets are a little bit stretched in terms of valuation. Maybe how the earnings will pan out from there on. I think markets will take a next step.
Right. Sampath, we were talking about the earnings scenario. How do you think it's likely to play out this time around?
I think this is the last quarter for the FY19. Full year looks like earnings are going to grow around 9 to 10% in that range. Vis-a-vis the expectation about upwards of 15% at the beginning of the year. But for the next year, I think by and large, earnings recovery seems to be certain. The last 3 to 4 years, the big drag was mostly a few one-off sectors, and especially the corporate banks. Things like pharma and telecom also was a drag on the aggregate earnings growth. But I think most part of this, these are now pretty much behind. I think for the next financial year, earnings growth of upwards of 15% looks reasonably certain. Even the IT, which is one of the large sector in terms of contribute in terms of profits wise, they also seems to be coming on a growth path. And BFSI, which is including the corporate banks, the worst seems to be behind for them. So the overall earnings growth for the next financial year, upwards of 15%, this time is relatively more. We appear to be more confident.
What about valuations? Are you more comfortable with the valuations now that we've seen a fair amount of correction combine most sectors and most pockets?
The valuations, even as we speak today, given the recent rally in the last 1 month, almost about 8 to 10%, valuation still continues to be on the upwards of the long-term average, slightly above the long-term average. Across the sectors, the maybe earnings are depressed. That's one of the reasons why the PE multiples appears to be relatively on the higher side. But the valuations seems to be a bit of a concern unless we see a good earnings growth this year, upwards of 15% or closer to the 20%. I think markets will, market return will be subpar this year if the earnings are not really going to be good.
Okay, what about the sectors, Sampath? Which are the sectors that you're more comfortable in, or you think have a good room for growth going forward?
Last few years, the growth drivers the market has been the consumer and consumer discretionary, and of course, the BFSI space. As we speak today, we are more certain about the earnings growth only in I would say the private banks. Outside of that, everywhere, the growth seems to be slipping. Autos now, it's been the third quarter in a row that the earnings are going to be relatively weaker, and the demand continues to be weak. Consumer sector also, which was doing very well for the last 4 years, of late we've been hearing that the demand slowdown, including the rural and as well as urban side. So that way, in terms of growth triggers wise, we have a very limited pockets, which is mainly the BFSI, which is going to drive the market earnings growth, aggregate earnings growth, followed by to some extent IT, and maybe pharma is also on the recovery path.
All right, Sampath, great chatting with you as always and getting in your perspective on the various aspects of markets. Thank you for joining in.